Today we're talking about Berkshire Hathaway. Is it a buy? But before we do this, just a couple of words about financial advice. This is an educational video, not financial advice. You should do your own research and obtain professional advice if you need to know more about this stock. So today, Berkshire Hathaway's market cap is around 1.029 trillion. Net cash, debt, and other claims on the balance sheet are 477 billion. So when you deduct these from the market cap, you get a figure of 552 billion, which is implicit. It's the implicit value of all of Berkshire's controlled operating businesses. And we're going to see if this is a fair value for these businesses. So as I said, the net claims and cash of the business are comprised of various items. The big ones I've highlighted in a gold color, but we'll start from the top. So the short and long-term debt for the whole group, mainly in the utilities, is 129 billion. We then have this huge cash hoard of 373 billion. And then all of the passive investments of the group amounting to 329 billion, which include 288 of listed equities, fixed maturity investments of 17.6 billion, and the equity accounted investments of Kraft Heinz and Occidental of 23.7 billion. Now, the next item, insurance float, is 177 billion as per Q1, but you don't deduct that dollar for dollar because it's a perpetual fund-like item, like a preference share, which we have discounted as a liability by 85% and only for our calculation deduct 26.5 billion for insurance float. Now, this is a great topic for probably a future video. We'll discuss how we got to that figure. But we are assuming we only deduct 26 billion for the insurance float liability. The next item, deferred taxes, which is essentially all of the unrealized taxes which are payable on the stock portfolio and also on various fixed assets in the utilities, is around 89 billion. Again, like float, like the insurance float, we've discounted this by a factor of 80% to show a liability against our valuation of 17.7 billion. And then quickly, other liabilities, 35 billion, minority interests, 2.2 billion, and other bucket items, for example, liabilities under defined pension schemes of 15 billion. So we have an implied value of the operating businesses of 555 billion, but how much are these businesses actually worth? This table just shows the current year's cash flows of the various businesses. Insurance generates a pre-tax cash flow of 5.66 billion. The railway, BNSF, generates 9.4 billion. Energy, Berkshire Hathaway Energy, 7.1 billion. And the myriad of manufacturing services businesses, a very healthy 17 billion, giving a total pre-tax cash flow for the group of controlled businesses of 39.1 billion. Now, the markets, as we said before, the market's implied value for these businesses is 552 billion, implying a 7% return, pre-tax cash return for these businesses on a multiple of 14 0.11. So a pre-tax earnings PE of 14, which to me is quite cheap. Our intrinsic value calculation actually values these businesses at the controlled businesses at 618 billion. And when you add the total amounts of cash, debt, float, and other claims of 477 billion, we calculate intrinsic value as 1.095 trillion. So when you compare that to the market cap of 1.029 trillion, we have an upside of around 6.4%. So the current share price of $477 versus an intrinsic value of a B-class share of $508 gives an implicit upside of 6.4%. The stock is trading at a price book multiple of 1.42 times. And this is right on the Berkshire Hathaway policy of buying back its own shares. So Berkshire is buying back its own stock at these levels. Greg Abel bought a sizable chunk of stock at these levels on his personal account. So we think it's a buy. Berkshire Hathaway is a buy at these levels. There's an implicit floor in this price, 1.4 times book, cheap, and we have calculated an expected compounding rate on the stock over the long term, 5 years and longer, of 10.7%. So we hope you enjoyed that video, a very quick rundown of what we believe is the intrinsic value. We think it's quite obvious what the claims and cash and other passive investments are worth, but we think the group is now receiving a conglomerate discount and that we're getting the active businesses massively cash flow positive for a discount. So it's a buy in our opinion. Thank you.